Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a business valuation expert focused on strategic planning and exit planning in St. Louis, Missouri. Today, we are talking ERC tax credit information for advisors and business owners with Catherine Tindall. She's a CPA in California, specializing in tax credits, and is also a partner with Dominion Enterprise Services. She's combined proprietary technology with professional expertise with her CPA team and is able to offer a fast turnaround time on credit claims while maintaining a high degree of precision. It's her mission to help business owners in key industries affected by COVID shutdowns, such as restaurants, construction, and hospitality, to take advantage of the employee retention credit before it begins to expire in the spring of 2024. Welcome, Catherine. How are you?
I'm doing well. How are you? Thanks for having me.
I do want to talk specifically about your practice because that's why I was so interested in talking more about it. But like in general, if people are around the country, all over the place, they can't necessarily, everybody can't go to you. You know, what are some of the benefits with at least seeking out somebody who has specific experience in this area that we haven't necessarily talked about, but that you could maybe provide? Because I don't think this is just going to your accountant and saying, hey, do I get the credit? Yeah. You know, it's a little bit more, but maybe you can talk a little bit to that.
Yeah, well, I'd say, you know, about our practice in general, I work with practitioners and clients all over the country because it's a federal tax credit. And so we're able to work with anybody that qualifies for it, whether, you know, you're in California where I am, or half of the year I'm in New Hampshire. You know, we work with people all over the country on this program. And we work with, you know, our main work that we do is we're kind of the ERC department for other tax practitioners. So, you know, most of our work comes from other tax practitioners who, you know, kind of looked under the hood of this thing and decided they didn't want to touch it. So that's, you know, that's what we do. And we work really nicely with outside tax pros because we handle basically the whole claims process other than, you know, the amended income tax returns that are required. So this claim itself, just so you know, is filed on amended payroll tax returns, but it also requires amended income tax returns to get the claim actually, you know, completed and done correctly because the credit interacts with your income tax situations from prior years. You know, if you're claiming in 20 and 21, you'd have to go back and amend those returns. So, you know, we have to work with the outside tax pro to get that work done. But that's how our practice works with people. And, you know, we track with the IRS, and then in the event of any kind of audit or inspection, you know, we're there to handle it because it's, you know, it's what goes into these jobs. You know, that's what we're expecting. The job's not done until it's gotten through audit because, you know, that's going to be a high percentage of the cases.
Now, could I, if I have my own accountant or accounting firm or whatever, maybe an internal accountant, external accountant, all of them, would it still be beneficial for me to contact you about this specific credit and still work with my other accountants?
Oh, yeah, because it's usually what it is, you know, for a lot of people, they'll start off by talking to their income tax professional to see if if you're dealing with a mid-sized firm or a large firm, very often they have a special department that does just these. So if you're in a situation like that, great, you know, talk to them. If you want a second opinion, feel welcome to talk to us too. I usually tell people get 2 opinions, you know, It doesn't cost you a phone call. So, you know, you can start there, but, you know, I wouldn't sever an income tax relationship because they're not handling this specific idiosyncratic credit. So usually, you know, usually when somebody finds me and not their CPA has found me, once I talk to the CPA and they're like, oh, you do this? Okay, great. I'm going to send you, you know, the rest of my people because it's, you know, I don't want to handle this. You know, that's a lot of what we get from outside practitioners, you know, when they find us through a client that we've done work for. So.
Oh, yeah. I mean, I think people really need to understand that this is, you keep your relationship with your accountant. This is like a special situation. Like, just figure out if it's money in your pocket. And if it's not, keep on going. Right?